This is Scott Becker with the Becker Private Equity and Business Podcast. Today's discussion is NVIDIA, Discover, and Target. So three different companies we'll touch on very quickly. NVIDIA is now up 200% year to date, knocking it out of the park, sort of the leader in what people think of as more complex AI generative chips versus commodities chips. Also getting lots of help from the U.S. government with this big chip bill that'll give sort of the full employment act for the big chip companies and so forth. Second, Discover Financial Services, and what might be a sign for more credit card and financial services companies, fell about 9.5% yesterday. It's still down only 5% year to date, so it's not doing that poorly, but that is a wake-up call. Again, the financial companies, the finance companies, the credit card companies, the bank companies, other than Amex, all having a bit of a wake-up call, especially the ones that are in the lending business, and we'll see how this continues to go. And finally, third, Target reported a great quarter, even though they slashed their profit outlook for the rest of the year. Their stock is up now, I think, almost 4% today. And this ties into the hot retail sales. Americans are still spending well, even though they're racking up so much credit card debt. They're at $2 trillion $1 trillion plus in credit card debt, which is $200 billion or more a year in the cost of just the interest on that credit card debt. So that's number. In any event, thank you for listening to the Becker Private Equity and Business Podcast. Thank you very, very much for joining us again. NVIDIA, Discover, Target. Fascinated to see what's going on with these three firms. Thank you very much.